What does a real note look like for a capital investor? Well, I'm going to show you here today. I'm Alden Guajardo, president of Silvercrest Opportunity Fund, and I provide accredited investors a 10% return for a 1-year term paid monthly or a 12% return for a 3-year term paid quarterly in an income-oriented investment strategy, investing like Warren Buffett. That's a 506c Reg D accredited investor offering. Did you know a non-accredited investor could actually buy a note and start cash flowing in a 30-day program with Mobile Mailbox Money? So let me show you what this actually looks like in real life through a case study of a note that we own in Silvercrest Opportunity Fund here in the Arizona market. We'll kind of get this background a little bit more oriented. But let's take a real look here. I'll share my screen, talk about one of the notes that we have performing currently in Silvercrest Opportunity Fund. So in the Arizona market with Win Mobile Homes, the largest dealer of manufactured housing, we buy, rehab, and resell manufactured homes on seller finance paper. So this note's currently performing. The updated photos are here. So let's kind of back into this transaction. This note, this specific deal is a $35,000 note producing $435.23 a month on a 20-year term with no maintenance, management, insurance, and taxes. Remember, this is a lien position on a property with a qualified Dodd-Frank underwritten buyer borrower currently performing in the Silvercrest portfolio. And it's backed by a real asset, a real house here in the Arizona market. Now think about it for a second. This isn't rent. This isn't speculation. This is a financial instrument backed by housing. So how do we even create this, get to a turnkey product like this with granite, laminate flooring throughout this property? This property is located off Southern and Broadway in the East Mesa market in a institutionally owned manufactured home community. So we acquired this home actually, and I'll get to the pre-rehab photos here in just a second, but let's just finish out this photo round here, give you a little bit better idea of the turnkey collateral, qualified borrower, and quality area. So lot 123, let's check out the pre-rehab photos here. So we acquired this home, I think, for $2,000-$3,000. Needed some repairs. Obviously, we went through the electrical, the plumbing, serviced the roof, serviced the AC unit. Took out all of this abstract kitchen. It looks like in this property. Hopefully, this is the right home here. Let me go back real quick. Yeah, they got the wrong photos in here. Back up here. I clicked on the wrong folder. Bear with me here. Get to my full collateral file. Here it is. So kind of same condition as those photos I just showed, but different property. The AC looked good at the end of the day. You got this nice brown and beige color, pretty outdated. Obviously needed some flooring throughout the home. We always check electrical and plumbing, but as far as the kitchen layout, to find a kitchen island like that is pretty tough to come by, especially under $50,000. So we acquired this home, and instead of a one-time check, as we exited this property, putting I think $10,000 to $15,000 into the rehab, now we've created a long-term cash flowing asset, right? In the Arizona market for under $50,000, this note's $35,000, paying $435.23. And really, you're buying a collateral file within a note investment strategy, which is what this is. This collateral file comes with a promissory note, titled documentation. You've got some pre-rehab and post-rehab photos actually in this folder, and then the buyer-borrower's financial documents and your contracts. The contract was the sale of the home. The promissory note is the note or promise to pay, in other words, upon the debt that is outlaid within this agreement. And the terms are subject to being agreed upon. So this buyer borrower agreed to pay a 14% interest on the transaction for a 20-year term, and their buyer borrower docs facilitate their Dodd-Frank or ability to repay the debt that's outlaid within the promissory note. So what is that monthly payment total for them being in a mobile home park, right? So for this buyer borrower, their monthly payment's $435.23. I think lot rent's about $950. So they were paying about $1,300 a month, including taxes, insurance, and the home payment and lot rent. Obviously, they'll have their electricals and utilities, but for a $1,300 a month payment, what are their literal alternatives for housing as a 2-bed, 2-bath, maybe as low as an apartment in the Mesa market, right? You got to evaluate what their alternatives are and their likelihood of performing, because really we're banking on the performance of them making their payments, and what's the risk within buying a note? It's non-performance. So as we reverse engineer here of what the buyer borrower's ability to repay is and what their alternatives for housing, you start to get a better idea of the likelihood of this note actually going potentially to the full term, or the person paying it off, throughout that time, and ultimately not losing any money, but also making the 14% yield on that transaction. Let's check it out. What does apartments.com have to say off these cross streets? As a 2-bed, 2-bath, you've got stuff at 1,500. It looks like as low as 18. You got one at 1,800. As low as it looks like 1,200. They're giving a month of free rent. That's a pretty interesting one that I hadn't seen before. But average is $1,500 here. So for less than what she pays in rent in this note, actually in particular, they're actually owning a property. It is on leased land, right? But they own the home, pay the lot lease, and get pride of ownership. They fulfill a neighborhood style living criteria with pools, jacuzzis, almost condominium style amenities within the transaction. And also, for less than what they pay in rent, they're paying like $200 less in rent actually to own this property. What's the appraised value of this property? We've done probably 30 transactions in this one community, probably 250 transactions around these major cross streets in the Mesa market: Ellsworth and Broadway, Wrecker and Broadway, Southern and Broadway, also Val Vista and Broadway, all across the 60 in the Mesa market. So this buyer paid, I think it was like $43,000. She put, I think, an $8,000 down payment from what I remember. So at $43,000 as a 2-bed, 2-bath, how do you go in and do a comp of the appraised value of this property? Well, Mobile Home Village is actually almost like an MLS for manufactured housing, especially here in the Valley, but one of the leading marketing platforms for sales in niche market manufactured housing. Most of the time, MLS transactions are pretty misleading, or ultimately not so much existent. This is niche market, leased land, manufactured housing, and this is really the MLS. So Mobile Home Village at Brentwood Southern, my property sold for 20% below market value. So this note is actually one of the lowest risk, highest reward investments that I've made personally, under $50,000. So, super scarce to find a transaction at around 50,000 that yields you these double-digit interest rates. And for a non-accredited investor, they could go and buy this note, or buy it out of my portfolio, or buy a note that mobilemailboxmoney.com has, and create the same strategy. Whether you start your own fund, you leverage other people's money in order to do that transaction, or you get your Uncle Joe who has 10 million bucks in a money market account and is making low rates of return for the want for stability, safety, and security, when in a note investment strategy, the lowest risk investment strategy out of any investment strategy, senior debt positions with a qualified underwritten Dodd-Frank borrower within the transaction. You could hypothecate that note to him, ultimately using his capital. Obviously, a higher level strategy for individuals that are savvy, but you hypothecate this note, pledge it in order to garnish capital investment at a lower yield than what the note yields, and now you're effectively creating infinite returns with none of your own money. That's financial freedom. What do we call that? Mobile mailbox money. Invest today with Silvercrest Opportunity Fund. I have 1.56 million currently working in our portfolio. That's about 20 some positions, and they're all performing. That's about $19,000 a month in passive cash flow, being the bank like Warren Buffett. Have a great day.